Hey there, it's Ron with Insurance for Texans, and I've got today's home insurance tip. And we're going to be a little more somber today because I've got a question for you. If you were to lose your home to a fire, what happens if that dwelling value is not enough money? So one of our current customers named Bob learned a very hard lesson, and I'd like to tell you what he learned. But before I do, let's look at how he learned this hard lesson. So Bob and his family experienced that most unthinkable thing, a fire which destroyed their home. Not only does it destroy your home, it destroys your possessions as well. The good news for Bob is that he had a home insurance policy. So the loss of use coverage kicked in, put them in temporary housing. They were able to begin replacing their personal property, their possessions, their belongings, and everything seemed to be going great. They sat down with the builder who put the plans in place to rebuild their home on their current home site. Everything seemed to be going grand, and then it wasn't. As they began that rebuilding process, the builder was having to secure the materials, secure the labor to put the frame up, to put the walls up, to put the roof on. But you see, when a builder comes in a one-off building situation, their cost for materials and goods is not reflective of what a tract home builder gets in the neighborhood down the street from you. The cost for labor is a little bit higher. As they're going through this process, they realized that they were burning through that dwelling coverage way faster than they expected. You see, when Bob had put this policy in place, he had called a 1-800 number, and the person on the other end of the phone didn't know about Bob. They didn't know about Bob's home. They didn't care about Bob. They simply knew he wanted to keep his price as low as he possibly could. And an easy way to do that is to keep that dwelling value as low as they possibly could. They cut every corner imaginable. As a result, the dwelling value was low. So what happened next? As Bob started to approach that threshold, the adjuster started doing their discovery on what had been done. What happens on a replacement cost policy, in that instance, there can be two things that can be very damaging. Number one, the extended replacement cost coverage can be eliminated because you didn't insure your home to full value. Number two, there is a penalty that can be referred to as co-insurance, and that's a big word that says, hey, you didn't insure your home to full value. Not only are we going to take away the extended replacement cost, which usually covers those cost overruns, but we're also going to reduce the amount of coverage that you're provided for your property. And in the end, you can be left with a lesser amount than the dwelling value. What that meant for Bob and his family is that fortunately they had equity in their property, but they had to go and get a second mortgage against their home that didn't fully exist in the moment to be able to rebuild their home. So fortunately for Bob, after this was all settled out, he learned that very costly lesson. But what he did is he sought out a local independent insurance agent like Insurance for Texans, and we sat down and we said, how much does it cost for you to actually properly insure your home so that if, heaven forbid, it was to burn down again, we could fully rebuild it for you? If you don't know if that's the case, if you think you have too much coverage and you want to evaluate that, speak to a local independent insurance agent like Insurance for Texans, who can help you evaluate what it would actually cost to rebuild your home so that, heaven forbid, if this happens to you, you're not left in a lurch later. I'm Ron with Insurance for Texans, and this is today's home insurance tip.